Good evening, ladies and gentlemen. A very warm welcome to the Stock Market Outlook by SC Securities. Today, we will be taking you through an overall stock market outlook using fundamental as well as technical analysis. And the session will be conducted by Mr. Charitha Gunasekara, the Head of Research at SC Securities, and Mr. Salia Gamagedara, the Manager Sales at SC Securities, as well as a specialist in technical analysis. To start off the webinar, let me hand over controls to Mr. Charitha. Charitha, over to you. Charitha, you're muted.
Thank you, Dirusha. Consistent state policies combined with local stability will provide a launchpad for investment and improved investor sentiment to drive the economy towards growth. A warm welcome to all our viewers on behalf of SC Securities. The main focus of today's presentation is to provide an outlook with regard to the Colombo Stock Exchange. Now, most of you all would agree that the stock market and the economy more often than not go in hand. And the stock market is considered to be a precursor to the economy's behavior. Thus, a thorough understanding about the stock market would enable one to understand the direction of the economy. In today's presentation, we would be looking at the key drivers behind the stock market growth and provide you with an outlook as to whether these indicators or the drivers are still conducive for the market to further move up. If you look at the market from a local perspective, the main drivers are very much the same globally. They would include expansionary monetary policy, expansionary fiscal policy, political stability and policy consistency, investor confidence, government policies, inflation, political stability, and so on. Now, to look at the main driver behind the stock market, it is the expansionary monetary policy. The central bank have adopted an expansionary monetary policy whereby they are keeping the interest rates at a low regime. And they hope to maintain these policy rates at a very low rate to drive economic growth. Now, in this table, we have compared key interest rates in January 2019 as against what they are now. The key policy rates, the deposit facility rate and the lending rate, have been slashed down by 350 basis points down to 4.5% and 5.5%. This is done in order to induce economic growth. The bank rate is being slashed down by 650 basis points. The statutory reserve ratio is being slashed down by 400 basis points down to 2%, thereby injecting billions of rupees into the economy as well as into capital markets. The prime lending rate is being reduced down to 5.65%, whereby it have reduced the overall cost of funds for corporates. The average weighted lending rate and the average weighted fixed deposit rate has also been reduced. Now, when the interest rates are low, the cost of capital for corporate entities would be low. When the cost of capital is low, it would increase the profitability of companies. Thereby, companies would be able to distribute more profits in terms of dividends to its shareholders. So the demand for shares would rise. On the other hand, investors of fixed income securities would now be earning a lower yield because of low interest rates on fixed income securities such as treasury bills and fixed deposits. So when they are earning a low interest income on these, they will be looking at alternative investment options, and stock market would be one of the key beneficiaries. So that is what we had been seeing in the last couple of months. As interest rates come down, most of you all know that now the fixed deposit rates are in the range of 4 to 5% range, which is a very low yield compared to the historic norms. So when these fixed deposits are maturing, there's a natural tendency the investors would be shifting these funds into capital markets where they can earn a much higher return. The second driver behind the stock market growth is the expansionary fiscal policy. The government have taken a stance of reducing tax rates, right? That is, again, in order to induce more investments in the economy. In this table, we have compared the tax incentives granted to key industries in the economy. With effect from FY 2021, trading, banking, finance, and insurance sector, the standard tax rate is being reduced from 28% down to 24%, a 4% reduction. In addition to this, banks and finance companies are no longer liable to pay the debt repayment levy and the nation building tax, which again is bringing billions of savings in the banking industry. In order to induce the local manufacturing entities, the government have given a tax concession of 10%, where the standard tax rate is reduced from 28% to 18%. So when these companies are paying lower taxes, they have more retained earnings, which they can invest for future expansion, as well as distribute to its shareholders by way of higher dividends. Both the construction services industry as well as the healthcare sector is also now paying taxes at 14% compared to 28%, a 50% reduction. So when low tax rates are there, it would increase the money supply in the economy. It would increase the retained earnings of companies, so that companies can invest these retained earnings for future investments and increase their future profitability, as well as pay part of it to its shareholders by way of higher dividends. Another driver behind stock market growth is the political stability and the policy consistency. Now, what are the factors that are contributing towards political stability and policy consistency? The current government is having a 2/3 majority in parliament. So what it means is not only they can pass public bills, but also they can bring in key constitutional changes that would benefit the country. Another factor which is contributing towards this stability is that there is no internal conflict in the country as before. So the government can now focus on growing the economy, reducing the unemployment level, and eradicating poverty. So those are the priorities right now of the government. Now the government along with the central bank have indicated repeatedly that they will be maintaining the same level of taxation and policy rates in order to facilitate growth. So this is giving the required confidence to the business community and the investors that these policies would be continued. And another most important factor is the port city. Once the port city bill is passed, the impending construction on the land will enable the government to attract the much needed foreign direct investment, which would help to stabilize the exchange rate. So all these are factors which are contributing towards political stability and policy consistency, which is vital for the growth of the. Another factor is the revival of the local manufacturing sector. As I already mentioned, with effect from FY 2021, the manufacturing sector companies are paying corporate tax at the rate of 18%. A 10% reduction is given. So these companies can invest these tax savings to expand their capacity and increase their future profitability. You all already know that certain items are restricted to be imported and local, and the government wish to continue with these import restrictions while imposing a higher cess on selected items, with the vision of reducing the dependence on imports and encouraging the local production companies. So if you look at the growth in the stock market over the last couple of months, the growth was mainly driven by the manufacturing sector. At present, there is a higher cess imposed on industries such as tiles and sanitaryware, cement, garments, etc. While tire manufacturers can also benefit in a big way because certain tire sizes are banned from import. Now, to answer the question whether this import restriction, the competitive advantage the manufacturing sector is getting due to this import restriction is a sustainable one, Minister Ajit Nimar Kabral has given the assurance that easing of restrictions will be done in a manner that would not hurt the local industries. And the best example to look at how this is done is the tiles and sanitaryware industry, where imports were allowed under strict restrictions and higher taxes. so that the local manufacturers could continue to increase their market share. Now, all these factors, what we have discussed thus far, expansionary fiscal and monetary policy, political stability and policy consistency, revival of manufacturing sector, all are contributing towards higher investor confidence. Due to low interest rates and low taxes, companies are making better profits. Thus, investors are getting higher dividends. And more importantly, stock market investments are free from capital gain tax. Irrespective of the size of the capital gain you make, 1 million, 10 million, 100 million, your gains are tax-free. And despite political differences, for the first time, we are having a dedicated minister for the development of capital markets. And incentives are granted for companies who are newly listing in the Colombo Stock Exchange, which is giving an opportunity for the investors to invest in new investment opportunities and growing sectors in the economy. Now, due to the low interest rate regime, investors who used to invest in fixed income securities, as I mentioned before, are shifting their money into high dividend paying stocks. Thus, as a result, the demand for shares are increasing, and naturally, when the demand increases without an increase in supply, the prices would start to move up. Now, as many of you would know, the Colombo Stock Exchange over the past year has provided investors with a much superior return when compared to alternative investments. So here we have compared 4 alternative investments, and the return they have generated within a period of 12 months between May 2020 up until April 2021. Now, if you invested in gold 12 months back, you are having a return of 3.81%. If you invested in treasury bills 12 months back, you were able to invest in treasury bills at around 7%. If you invested in fixed deposits 1 year back, you are having a yield of 9.51%. But if you invested in the Colombo Stock Exchange 12 months back, on average, the stock market have grown at a staggering rate of 64%. So now, this is why there's a lot of funds coming into the stock market. When these fixed income securities are maturing, you will have to reinvest these funds between 4 to 5%. And billions of funds are there looking for alternative investment options. If you really see, there aren't much alternative investment options. The only lucrative investments are either to invest in the stock market or to invest in real estate. As you know that if you invest in real estate, there's less liquidity compared to investing in the stock market. Now, taking a deeper look into the performance of the stock market over the last 10 years, the Colombo Stock Exchange reached an all-time high of 7,863 during 2011. And from there onwards, the market have moved in a horizontal channel. It had been ranging between 6,000 to 7,000 range. And it reached a new all-time high of 9,000 during January 2021. But if you compare these two all-time high values, there's a significant difference between these two all-time high values. The market was relatively expensive during 2011. It was trading at a P of 29.5 times and price to book value of 3.5. But however, even when the index reached 9,000 in 2021, the market was still trading at a PE of 14.9 times and price to book value of 1.5. Now, if you look at the past decade, our market has not gone anywhere. It was at 7,800 in 2011, and now it is again around 7,200. Whereas the rest of the world have moved far away. If you look at all other markets, they have gained a lot. So there were so many reasons for our markets not to go up in the past 10 years. Few reasons were political instability, policy inconsistency, likewise. So there's a lagging effect for our market to perform. So that's why you see that even when the index reached 9,000, our market was relatively cheap compared to its peers. And it was fully geared to further move up. Now, talking about peer comparison, in terms of PE, price earnings ratio, Sri Lankan market is one of the cheapest markets amongst its peers. Now, the latest numbers say that our market is trading at a PE of 13.5 times. But this compared with other markets such as Singapore. Singapore is trading at a PE of 39. India trading at 31. Japan is trading at almost 31. Indonesia is trading at 27, and so on. So compared to rest of the world, Sri Lankan market is trading at a very low PE ratio. Not only that, 56% of the companies listed in the Colombo Stock Exchange are trading below its net assets value, or in other words, price to book value is less than 1. And another 35% of the companies are trading below a price earnings ratio of 10 times. So there is ample of investment opportunities in the Colombo Stock Exchange for one to invest and earn a return way higher than investing in fixed income securities. Now, this is a portfolio of shares that we recommended to our clients, and we have calculated the percentage return this portfolio have generated over a period of 12 months. So we have compared the price as of 11th May 2020 against 30th April 2020. Now, mind you, prices as of 11th May are adjusted for a month period. So if you take DIP products as an example, DIP product share price have gained 874% within a period of 12 months. It has given a dividend yield of 4.14%, close to a fixed deposit. So the total return is 878%. Kcup has given a return of total return of 555%. Haley's has given a return of 538%. Now these shares moved up because of a reason, because of a fundamental reason. Just to mention a few, you know that DIP products is producing surgical gloves. So the demand for surgical gloves is increasing globally because of the pandemic. Kcup is producing activated carbon. Again, the demand for activated carbon is increasing globally, and it has intensified because of this current situation. So these are companies which are going to have this sustainable advantage over the next couple of years. It's not going to go away. And if you look at a company like Royal Ceramics or Lanka Tiles, the import restrictions are going to continue. Thus, the local manufacturing companies are going to continue to increase their profits. Now, the main ideology of this slide is basically, despite how bad the economy is doing, despite how bad the global situation is, if you invest in fundamentally strong shares, you can generate exponential returns. So don't be worried about where about the global situation. Don't be really get carried away by these news articles about economic situations. Despite all those things being bad, if you invest in fundamentally strong shares, those companies will generate profits and you will get a very high return. Now, the beauty is, even after generating such extravagant returns of like 500%, 600% within a 12-month period, these shares are still fairly valued in terms of PE and price to book value, right? Yeah, I have included that as well. These are still fairly valued in terms of PE and price to book value, and they are fully geared to generate much better profits in the coming quarters. So we are of the opinion that the Colombo Stock Exchange is undervalued, and it has all the potential and the necessary drivers conducive to it for a further upsurge. So to discuss more about the technical aspects of these counters, let me now call upon my colleague Salia.
Thank you, Charita. Let me have the screen. All right. Hi, I'm Salia. Now that Charita has taken us through the macroeconomic side, and at the same time the potential that's there in many fundamentally strong counters, I will be taking you all through the technical analysis, rather the price action of these counters, starting with DIP products, as you can see here. Now, DIP products is presently going through a support base between 52.40 and 58.30, and the next support between being between 44 and 48.10. And thereafter, the will test break above 58.30, will test the resistance area between 62.20 and 68.50. A strong move above 68.50 can take the prices back again to test the present high or the highest high of 76.50. Now, this is the area at present, as you can see, today's close was a bullish close compared to what we saw during the start of this week. In fact, if you take the start of the week, it was trading somewhere around 54, between 54.50 and 56 rupees. And uh, finally, today, it closed at 56.70. So right now it's trading within a channel between 52.40 and 58.30, and we expect this 58.30 to be broken on closing basis. Thereafter, we'll test this 62.20, which is the present high. And I would like to take you all through the return on investment that you will see when you accumulate between the 52.40 and 58.30 area. At 52.40, you will see ROI between a minimum of 18.7 to 46%, and at 58.30, an ROI between 6.7 to 31%. Now, there are two types of strategies that you can follow in many of these counters. Basically, or if you take all these 10 counters that we showed you all, you have two types of strategies that you can follow. One is the strategy of accumulation. Other one is the breakout strategy. In the case of dip products, the accumulation, you can start right now between 52.40 and 58.30 and realize the ROIs that we have given here. Or otherwise, you can wait until the stock tests 58.30 on closing basis and move into a short-term trade. Remember, a breakout strategy is specifically a short-term trading strategy. Therefore, you can make use of the breakout strategy by entering to the counter at 58.30 and realize these levels or these areas and realize this return on investments. It is important to understand that while we are giving you these ranges, we are giving you these target percentages, it is very important for individuals when they make their call to have their own ROIs. That's very important, when you're trading short term or into the medium to long term. At the same time, another feature that we can see is that if things go well, based on these based on the present momentum and the price action, we will realize, or we will see that these levels, the first resistance area and the second resistance area, can be achieved between the period from June to July. That is something significant for all these counters. Moving on to the next counter, which is Expo Lanka. In the case of Expo Lanka, the support base is between 43.10 and 47. Then if by any chance that there is a failure to hold 43.10, then the next support of 38.40 to 41 rupees can be tested. But at the moment, it is evident that it's trading or taking support between 43.10 and 47. The resistance is between 51.40 and 54.40, and the next resistance is at 59 to 64.60. Now, what is important to understand in Expo Lanka is that the prices are taking a consolidation, forming a strong foundation that that is expected when we see any counter or a market anywhere in the world is moving into the next level in an all-time high environment. So basically, um, the, the price, by forming that consolidation and forming that strong foundation, is creating a launching pad for higher price extensions along with their fundamental performance. And that is exactly what we can see in Expo Lanka. In that scenario, while this foundation is being formed, you have this resistance and support levels. So this 43.10 to 47 is a good area for those who are confident of the future of Expo Lanka to start accumulating and following that strategy of accumulation into taking a position whereby you will realize or you will be in a position or in that privilege to realize the returns that we have given here. At the bottom of the support area at 43.10, you have a minimum return of 19% to a maximum return of 49.8%, purely on the fluctuations between the present all-time high and the low of the support area. Or otherwise, you wait for the breakout or buy at that 47 rupee area and realize a minimum return of 9.3 to a maximum return of 37% in that same price range between 64.60 and 47 rupees. And that's as far as Expo Lanka is concerned. Haley's, noticeably, it just like the other stocks, it was within the week, there was a failure and trying to find support, and it was trying to and it was taking support between this area of 71.60 to 78.20, and today we saw that it broke above 78.20 and closed at 80, and it is on its way to test 86 rupees. Incidentally, 86 rupees is the present highest high, and the present high is at this level of 85.40. So 86 is expected to be tested. A breakout above 86 with volumes will test 95 to 100. And leaving this bottom level aside, because now it has taken a breakout, roughly at 78.20 or at 80 rupees, you will see a return of about 9% to about 25%. And in this case, 78.20, the minimum return is 10% to 27.90. But at 80, it should be around 8% to probably about 26%. That is, if whoever is believing in Haley's is taking a position into the counter. Then moving into the price action of Kcup, you can see the prices are taking support between 100 and 107.50. 100 was a very strong support in the short term, and today it closed at 107 rupees. Any breakout below 100 rupees will take it to test 87 to 92 rupees, but that is not the case at the moment. Breakout above 107.75 can retest the present high of 119.75 and move in to test within the resistance area between 119.75 to 130. This is the area that it can be tested before breaking out and moving to 150 or thereafter 170. So at 100, you have a return of a minimum of 19.7% to 70%. And whereas at 107.75, the returns are minimum 11% to a maximum of 57.7%. On to Royal Ceramics. which was taking a support between 33 and 35.60, broke out today to close at 37.30 after hitting and making a high also at 37 rupees, which was a very bullish Marubosu candle today. And it is on its way to test the resistance of 39.30, thereafter 44, and right now we have kept the resistance, the maximum resistance point at the present high of 44 rupees, but the momentum can take this further up to an expectation, a short-term expectation of from that 44, it could test even 50 rupees or 50 rupees and 50 cents. That is in the rally and the price extension that can happen after 44 is tested. Until the price action that will happen at 44, we are going to stick with the target of 44 or the resistance area of 44 for Royal Ceramics, and you will see a minimum target at 33. Of course, now it's long gone, which was at 19, but at today's close of 37.30, it's a minimum target, is almost at, it's a 5% return, but because of the closeness of that resistance area, in all probability, we will see that the 44%, rather 44 rupees, is going to be tested, giving you a short-term return of 17.5%. And moving on to Lanka Tiles, another significant move there today in this tiles company, which was taking support between 42 and 47 rupees and broke out, which can extend to 53.60 to 58 rupees, which will be a ROI of, from here, if you take a 9% to 19% to 28% and to 39. Basically, from 9 to a maximum of 39% return can be found if the prices are going to extend to reach the highest level of 68.40, which is the present highest high. Talking of Lanka wall tiles, just like the other two ceramic counters, broke out of the support base above 47.80 and closed at 49.20 after hitting a high of 49.70. Thereafter, we can see now that the breakout has taken place. We will see it testing this 54.50 to 58.10 range, which will be an ROI of a minimum of 10% to 18%, and at the R1 stage, the next level, 29% to a high of 37%. Then moving on to Valuable One. Now, in the case of Valuable One, we can see that it is still taking support between the support range of 49.50 and 57.20, and trying to test the upper line of that support area of 57.20. So basically, if the price tests and breaks out 57.20, you have a ROI of a minimum of 9% to a maximum of 40%. Moving on to Kalini Tyres. In the case of Kalini Tyres, there again, it's within that consolidation between 81 to 86 rupees. Any break below 81 rupees can test 75 to 80, but right now it's taking a strong support at 81 or between 80 and 81 rupees. Any breakout above 86 rupees will retest the present high of 91 rupees, and then test 93. Thereafter, a breakout will take it up to 96.20 to 100 rupees. Then at 81 rupees, you will see a minimum return of 12% to a maximum of 23%, whereas after a breakout at 86, it's a minimum of 6% to a maximum of 16%. There again, we have kept it at 100 rupees, but we can see that with the potential that it has, with the future prospects, let's see whether it's going to break that 100 and retest this present high or the present highest high of 112 rupees. Then the ROI from the 16% can even be higher. Finally, amongst this list, we have MGT. There again, the prices are taking support between 1650 and 18 rupees, and today it tested 18 rupees but didn't close, and it closed at 1790. So at 18 rupees, to test this range between 1980 to 2080 will be a minimum return of 10 to 15.5%. In this case also, after testing this 2080 area, the present highest high is at 2150, and anything above 2150, we will see new highs being formed for the counter. Now, if all these counters are going to perform as with breakouts, and if the kind of the support base that it's forming, and at the same time the potential that it has, these counters are having, and provided the momentum is intact, these resistance levels will be tested. If these resistance levels are going to be tested, then what will happen to the all share index? Along with the rest of the heavyweights in the market, these many of these counters are also considered very strong counters in the market, who are commanding a bigger voice in the market. Therefore, what would happen to the market is that presently it was trying to break above 7,201, which happened today when it closed above 7,201 to close at 7,242, and we can expect now for the momentum, along with the strength that is forming in these counters that we mentioned, we will see that the resistance between 7,365 to 7,467 is tested first, and breakout above that will retest the April highs of 7,666, and anything above that will be 7,943, which in turn will psychologically test 8,000 points. So that is what is in store in the short in the short term, and if all goes well, between June and July, we can see, or we can expect, all these resistance levels to be tested and sometimes even broken. At the moment, as I mentioned, we will be sticking to these maximum points and see how it works. Most probably in the next monthly meeting, we will be able to just run through, or during the course of the month, we will be able to keep you all informed as to what is going to happen, and whether our expectations are in line with what we are seeing now, and we will be keeping you posted. And that's about it from my side, and let me hand you back again to Dilusha. Over to you, Dilusha.
Thank you, Charita and Salia. At SC Securities, we sincerely hope that with today's webinar, we were able to give you a great insight for you to make your investment decisions. And if you have any further clarifications, please reach out to us at SC Securities. We are more than happy to be at your help. And with that, ladies and gentlemen, thank you very much for joining with us today. And we will meet you again very soon. And until then, have a pleasant evening. Thank you very much.